If you're wanting to retire early, we're introducing our $1 Million Plus 2021 portfolio strategy. So stay tuned for the full details. Thank you for watching. This is Richard with Wisdom Investor. We're going to introduce our 2021 portfolio strategy on building a $1 million plus portfolio. We're going to talk about 5 ETFs that will help you achieve that and how you can go about and growing your money to reach that goal. Let's take a look at some investing rules here before we get started here. First of all, this is not a get-rich-quick scheme. Number 2, always be aware of what you can lose. 3, use stops to protect your losses. 4, this does not replace your current investing strategy. And number 5, this is not gambling. These ETFs are involved in trending concepts and companies that are here to stay. Also, keep in mind, anytime you're investing, there's risk involved. We're looking at a financial calculator here so we can look at how we can achieve this goal. We're going to look at the ages of 30, 40, and 50. Millionaire target age range is 67, although you'd be able to achieve this prior to that. Initial investment in each one of these funds would be $2,500. Savings per month, you would save $50 per fund. Expected rated return is 15%. Yes, that's 15%. I know that's high. Anybody who's watched my videos, I normally am very conservative on that, and I normally use about 6%. But once you see these funds, you'll agree with me that I think this was a good number to use. Expected inflation rate, 2%. We're looking at a person starting this plan at age 30. By the age of 67, they would have $5.9 million. If you adjust that to inflation, by the age they reach 59, they'd have over $1 million equivalent to today's dollars. We're looking at a 40-year-old that followed the same plan. Instead of investing $250 per month, they'd invest $500 per month. By the age of 67, they had $2.3 million. Inflation adjusted at age 63, they would have $1.3 million in today's dollars. If a person age 50 was to start this, they would need to put away $600 per month. That would achieve a goal at the age of 67 of $640,000. Keep in mind, a person age 50 doesn't have as many years to get the compounding to work as a person that's, say, 30 years old. Now, if a person age 50 put away $1,000 per month and was able to achieve this rate of return of 15%, as we talked about, by the age of 67, they'd have $977,000. Okay, that's an explanation on what it would take to get there. We're going to take a look at these 5 ETFs and 2 substitute ETFs. This first fund we're going to look at is Invesco Solar ETF, symbol TAN. The year-to-date return on this is 234%. Incredible. Why do we like this particular fund? For one, California becomes the first state to require solar panels on new homes. Here's how it will reduce utility costs in this particular article. So what's happened in 2020, California says new homes must have solar panels. Most likely, this is going to follow suit throughout the rest of the United States, especially in the Sun Belt. The next ETF we're going to look at is Kensho Smart Mobility ETF, HAIL. Year to date, this ETF is up 84%. This particular ETF has powerhouse stocks like Tesla, Workhorse, NIO, and others. Next stock we're looking at is ARK Innovation ETF, ARKK. Year to date, this is up 165%. It has a 5-year return of 46%. The fourth ETF we're looking at here is ARK Genomic Revolution, symbols ARKG. This ETF is up 207% year to date, has a 5-year return of 39%. The fifth ETF we're looking at is Bitwise Crypto Index Fund, symbols BITW. Now this particular ETF has just started trading here in the last few weeks, but I think it's a good way to get into the Bitcoin sector. We're going to look at our 2 alternative ETFs here if you want to switch one of these out for one of the other 5. We're looking at VanEck Vector Semiconductor ETF, SMH. Year-to-date return of 53%, has a 10-year return of 22%, and a 15-year return of 13%. The second alternative ETF is the iShares Nasdaq Biotechnology ETF, IBB. Has a year-to-date return of almost 30%, 15-year return of 12% and a 10-year return of 17%. A third ETF that I'm going to throw in here is the Invesco QQQ Trust ETF. The QQQ is up 46% year to date, has a 15-year return of 15%. The next question is right now the time to buy in on these? Let's take a look at the 10 here, the solar energy. You can see that this has moved up and it's up here at the highs here. Most all of these have moved up here and are at the highs here. This is HALE, the EV stock, electric vehicle stock. This is ARK-K. Again, you can see it at the top. Looking at ARK-G. We're looking at Bitwise here. And then our alternative fund is the SMH Semiconductors at the highs. And we're also looking at the IVB. As soon as we see buying opportunities on these, we will let our viewers know. But right now, I don't think this is the time to go plowing in. We need to allow these particular ETFs to have some type of a pullback. Now again, that may not happen. There's a lot of money out there coming into the markets. Another question you might ask, well, what if these funds don't get 15%? What if they only get 12 or 13% over a period of time? Well, that's still much better than the S&P 500, which averages about 9% per year over the last 50 years. Again, if you get 12 or 13, you're going to get there to your goal that much quicker. I want to thank you for watching this 2021 portfolio strategy to build a $1 million plus portfolio. We'll continue to update this portfolio, so stay tuned for updates.